as the business has grown, we realised that it's to make a difference, not only from an investment perspective, but also make a difference with the community you operate in.
Geoff Wilson is Chairman and Chief Investment Officer of the company he founded, Wilson Asset Management. WAM now comprises 7 listed companies that together manage more than $3.5 billion in shareholder capital on behalf of 90,000 shareholders. Geoff also holds a number of directorships with investment companies and non-profit organisations. WAM's philanthropic initiatives include supporting also the future generation companies. Here to discuss more is Geoff Wilson. Geoff, welcome to TCN TV.
Look, thank you, and thank you for having us on.
Now, Geoff, I last interviewed you in 2014 ahead of the launch of Australia's first philanthropic wealth creation vehicle, and you now oversee Future Generation Australia and Future Generation Global. Now, for all those that still aren't convinced, can you outline how are successful investment and social returns possible together?
It sounds like a bit of a dichotomy whether you can do both. But, these vehicles, Future Generation Investment Company, FGX, which is listed on the stock market, has about $500 million of assets, and Future Generation Global Investment Company, FGG, which is also listed on the stock market, has about $500 million of assets. And what, to me, one of the fantastic things is the funds management industry has come together here, and they're managing money in Australian equities and or global equities, depending. FGX is getting exposure to the best Australian boutique fund managers, and with FGG you're getting exposure to the best global boutique fund managers. And these fund managers, the reason why it works is the fund managers are managing the money for free, pro bono. And that allows 1% of the assets to go to support incredibly worthy causes, and that's children at risk and youth mental health. So it's really, it's a fantastic structure, which I actually initially saw in the UK, where it's a win-win-win. It's a win for the fund managers because they get the ability to give back, and by applying their trade. It's a win for the investor because he gets exposure to the best fund managers and actually gets it on the cheap, because he's not paying performance fees. And it's a win for the charities that get funding over time, and mental health, obviously with what's been happening in COVID. First of all, it was grossly underfunded when we started focusing on that area 5 years ago. But with COVID, then it's clear it has been a significant stressor for a lot of people.
And everyone certainly loves a win-win-win. And Geoff, when it comes to impact investing, it is a relatively new trend. When do you think that it will become the norm in Australia?
I think it's heading in that direction. There's no doubt it's the younger generation that is really putting pressure on, I would say, the older money to be focused in that area. What we find is, talking to a lot of our investors, it'll be their 40-year-old children that are very focused on really making a positive impact to the community. Where, say the 60, 70, the 80-year-olds, they may have been, they were brought up in an era where it was work hard and try to get well paid for the hard work. Where I think the younger generation, it's a realisation that you really have to give back. And one of the things we find interesting, where I'm the founder, I suppose, of the 2 Future Generation vehicles. They've got totally independent boards, and they have a CEO. And actually, if we're just having a changing of the baton at the moment. So Louise Walsh has been with us for 6 years. She's just stepping down, and we're looking for a new CEO. So if anyone that really wants to make a difference, we've had a number of interesting people already apply, and I think we'll have a very interesting person that can really take these companies to the next level.
Certainly. Now, the future generation companies do aim to make a difference by delivering an income stream for high impact charities, working really to better the lives of Australia's future generations. How have these charities been impacted by coronavirus?
Yeah, it's been very, very difficult for, I would say, all the charities we support, and that's the children at risk charities and the youth mental health charities, and particularly I'd say the youth mental health charities, where the requirement for their services, with the isolation, with the various lockdowns, the dislocation, particularly for young adults, it's been exceptionally difficult. So their services are required, more than ever, and from our perspective, it's good that we can provide them with a consistent funding stream, and we can only do that because the shareholders support us, and also it's really the fund managers manage their money in their main funds and not charging us. And like the interesting thing is the shareholders are supporting us. There, there is a feel-good factor. But number one is they want a good return, and that's why we've selected boutique fund managers that are making a significant difference in terms of performance. So it is really a great result for the investor, where they can be with the best fund managers, also really give back and try to help children at risk and youth mental health in Australia.
And Geoff, while Australian retail investors have limited exposure to alternative investment opportunities, WAM Alternative Assets provides retail investors with exposure to a portfolio of real assets, private equity and real estate, and really aims to expand into new asset classes, also such as private debt and infrastructure. What underwrote your decision to take over Blue Sky Alternatives Access Fund and really have the company join Wilson Asset Management stable as WAM Alternative Assets?
Obviously we're talking about the two future generation listed investment companies, and we have the reason why we could be involved in those is we already had a very successful funds management business with the WAM group of funds, and the largest being WAM Capital, which is capitalised at about $1.6 billion, and we manage about $3.5 billion under 7 listed investment companies, and the most recent one is the one you were talking about, WMA, WAM Alternative Assets, which really gives people exposure that it really gives them significant diversification rather than having an equities exposure. As you mentioned, it gives you exposure to alternate assets, and it's the only listed investment company that can give you that type of exposure. So by buying one share, you can get exposure. Some of the assets, as you said, private equity. There's venture capital. There's some property. We're looking at some debt instruments. And also there's, it gives you exposure to a very successful water fund. So you're really getting significant diversification by buying shares in WMA. And we've only been there, we've only taken over the management in the last year, and it was a 2-year journey to get to that stage. But the reason why we persisted is, we knew that it made sense, and it really makes sense from not only from our investors' perspective, but ourselves as fund managers. It gives us information and exposure to various other areas. We've got 90,000 shareholders amongst our 7 listed investment companies, and most of them are getting exposure to equities, whether it's mid and small cap, whether it's large cap, or whether it's global equities, where this allows them to get exposure to just a different asset class.
And Geoff, finally, a number of institutional investors in Australia and abroad have recently announced net zero emissions targets by 2050. Does Wilson Asset Management have plans to announce a similar target?
Now, I'd be interested. I'd love to do a survey of the younger Australians and see what they think. By getting a sort of zero emissions by 2050. We looked at this a couple of years ago, and really, looking at how important it is that that we do the right thing and be involved. And what we decided is, for our company, as in Wilson Asset Management, we wanted to be zero emissions as quickly as we could. So from 2018, we've actually been zero emissions. So I actually think it's 2050s. If a company can't be zero emissions significantly quicker than that, then they're not trying hard enough. And initially, we went zero emissions. So we've been zero emissions since 2018. And not only that, is part of that whole process is looking at ways where you can reduce your emissions. So you can obviously neutralise your emissions by spending money, but the bigger thing is how do you actually reduce your emissions. So that's where we're on that process, and various other things we've looked at from an Australian context is we're in the process of finishing a reconciliation action plan, and to me it's and we're looking at various other sort of ESG initiatives. We've got a few subgroups in our made up of our staff, just looking at how we can effectively be better corporate citizens. I think that's what we all have to pay attention to.
Well, Geoff, thank you so much for your insights today, and fascinating as always to hear how you are leading not just with investments but with social responsibility. Look forward to the next update.
Thank you very much.
And thank you for watching. Now, if you like what you see, please be sure to like and share the video, subscribe to TCN TV and drop us a comment. Tell us who you would like to see next and what you would like me to ask them. Or if you're an investor, send us an email so we can keep you in the loop with the latest ideas to empower.